Thank you so much for joining us today. I'm Sam and I moderate these presentations. And in just a second, we'll be joined by Michael Corgett, one of our financial advisors. Today, Michael's going to be covering some topics related to Social Security and any updates that we think you should be aware of. Before he comes on, just a couple housekeeping items for you to be aware of as well. First and foremost, please be reminded that we are not affiliated with any specific company. We are a completely independent group of financial advisors here, so keep that in mind as you're listening along today. Secondly, as Michael is speaking, you will see me entering some links into the chat. They're going to pop up above your head. You can click directly on those links and they're going to guide you to valuable resources we have available for you. One of which is simply going to be a link to book an appointment with either Michael himself or one of his colleagues to speak to them about any concerns or questions that you may have that you would like answers to. I invite you to do that. It's completely free. And lastly, I apologize in advance. We will not have time to answer your questions live today. I ask you to put your questions in the Q&A box down below. It is completely anonymous, and I will make sure one of our financial advisors can reach out to you after this presentation and answer those questions with you over the phone or through email after the presentation has ended. And without further ado, we're going to jump right into it with Michael Corgett.
Thank you, Sam, and thank you everyone for joining us today. Today we're going to talk about Social Security benefits and the different times that you might want to consider taking it and what part it fits in the role of your overall retirement plan. It is one of the legs in what we call the retirement planning stool, so Social Security is important. It is definitely not a benefit to consider being your only income in retirement. So what you do for yourself and hopefully an employer provided pension plan can be the other two strong legs in that retirement planning stool, which would make retirement obviously much more enjoyable. In the long run, that would be just that much better. So let's go ahead and get started. What retirement income will you have? I already mentioned a few of these. Social Security, one of the legs, your savings and your overall investments, including your 401k. Very, very important what you do for yourself in your own retirement savings, whether it's a 401 or IRAs or just after-tax investments. Investing for growth will obviously provide more long-term assets than just investing in fixed income CDs type of investments, long-term investing in the market, you definitely are better off. And then pension benefits. For many of you, you have a pension. For a lot of you, you do not. So again, what you do for yourself is going to be more important to allow yourself to have a comfortable retirement. And then obviously either part-time earnings or even more full-time earnings, just doing something different than what you did when you were working for company A, B, C. Part-time, starting your own business, working at the grocery store, being a golf course marshal is my ultimate dream, getting to play golf for free and then getting to be outdoors and getting paid for it. So whatever that might be, that's as long as it makes sense to you. Some current Social Security news. Social Security is definitely a key source of retirement income for nearly 72 million Americans and growing each and every day. Social Security has never missed a benefit payment over the last 8 decades, and that's important. The Trump administration actions, their goal is to reduce the Social Security Administration's job count by 7,000 employees, or a reduction of 12%. They plan to close nearly 4 dozen Social Security Administration offices around the country, which is where you might go to get some information and speak to a specialist, and closure of many of the in-person hearings for disability benefits and general services. That's a much more different conversation that we won't have here today. Some of the added barriers, requirements for appointments to meet face-to-face with the Social Security agents, it's going to take longer. So the sooner that you get started in whatever your Social Security benefit election is, the better off you'll be. And I'm even recommending to folks 4 to 6 months in advance of when you want your benefits to start. So, no immediate benefit cuts, some of the impact on new claims, the biggest impact on those starting benefits for the first time. You need to sign up in person nowadays. Processing new claims for retirement or disability benefits may take longer again due to staff cuts. Early buyout offers to SSA employees. Again, less employees to do the work, but this is one of the changes of the current administration. And again, I strongly recommend that you get started as early as you possibly can. 4 months minimum. We used to say 3, but 4 to 6 months makes an awful lot more sense to get your benefits started when you would like to get them started. And that's important, is getting them started when you want them. The outlook for Social Security in general, it's fine right now, but it is getting worse. The idea is that baby boomers, like most of us, there's 10 to 12,000 of us each and every day turning the age of 62 and that therefore are eligible for Social Security early retirement benefits. There's that many of us also turning 66 and 67 each and every day too, which means they're eligible for full retirement benefits. There is currently more revenue being collected than the current benefits that are being paid out, but there will come a time in this slide, 2034 to 2035, is when the dollars being collected are the dollars that are being paid out, and it will only get worse moving forward. So, does something need to be done? Yes. Will our politicians in Washington, D.C. do something about it? The answer is I don't know, because Social Security is such a hot button topic, especially for those of us that are near collecting it and for those of us who are already getting it. Politicians do risk losing their seat in Congress if they choose to make significant changes to benefits for those of us who are actively collecting them. It's considered many times touching the third rail, where you could get electrocuted. So something does need to be done, whether benefits are reduced, as you can see here, or an additional tax is implemented to make sure that benefits continue on the stage and on the scale that we all expect. Well, we will see. But again, something definitely needs to be done sooner rather than later. Changes for 2025. The earnings cap for full Social Security tax deductions are $176,100, and that is for this year. The earnings credit requirements for full will increase, meaning workers need to earn more to qualify for the maximum benefits. The higher you are towards this annual cap, the more your benefits would be long term. Keeping in mind that the Social Security looks at your best 35 years of earnings, if you have 35 years of earnings, and those are the earnings that go into your Social Security benefit calculation. Full retirement age did remain at age 67 for now. Excuse me. Some recent inflation data. The inflation data has been getting better. An increase recently of 0.2% in February, which produces an annualized inflation rate right now. Core CPI-U is 2.8%. That CPI is lower than January's increase of 0.5%, which produced approximately 3% inflation. You know, this is an awful lot better than a little more than 2 years ago when inflation was as high as 9%. Now, the Federal Reserve has done a good job by raising interest rates to slow down spending, which in turn has definitely reduced inflation. It's not at the 2% rate that the Federal Reserve would like it to be, but it is certainly getting better. And getting better is better than getting worse. So inflation is definitely also a hot button, and inflation does impact your future benefits. Inflation also impacts the value of various investments, especially fixed income investments. When interest rates go up, the underlying value of fixed income investments tends to go down in value. And when interest rates go down, the underlying value of fixed income or bonds goes up. So hopefully interest rates will trend downwards as they have over the last couple of years. They've sort of been stuck in neutral here recently in the low to mid 4% for treasuries. The Federal Reserve has not implemented any recent rate reductions. We hope they might do one, possibly two reductions this year. But they're keeping an eye on inflation overall. And if inflation heats up, well, they may even raise rates. But if inflation continues to lower, but economic activity goes down, then they might lower rates to spur growth. Sort of a catch-22 for the Fed, just something to keep in mind. Interest rates are important to your investments as well as the effect of overall inflation. Some of the things that you need to know. So let's go ahead and dive in. When should you start your benefits? Well, obviously, if you wait till full retirement age, you're going to get full retirement benefits. And that's between ages 66 and 67 for most of us. You can begin to take your benefits at age 70, and that's where your benefits will max out. Between the ages of full retirement age and age 70, you can glean that an increase of approximately 8% per year. The opposite the case if you decide to start benefits early. At age 62, you can start to collect your benefits, but you're looking at a potential reduction from your full retirement age benefits of up to 30%, or about 6% per year, depending on whether it's 66 or 67. So these things are very important. When are you going to retire? When are you going to start to take your pension? What will your investments and your overall savings going to do for you? Are you going to continue to work part-time? We're going to talk a lot more about this. The age is obviously very important as to when you want to decide to claim your benefits. If you're married, timing is somewhat doubly important because there's usually one higher earning spouse in the household. And that higher earning spouse can start, the later they start their benefits, the higher their benefits will be. Their spouse is eligible for a minimum of 50% of their higher income earning spouse's benefit or their own Social Security benefit, which could be higher. But when that higher income earner passes away, the lower earning spouse will step up to that benefit, and the higher that benefit is, the better off they will be. So again, when you choose to start your benefits are key here. And really, the answer, there is no one size fits all. We talk an awful lot about planning, and planning is very important. The sooner that you do start to plan, the better off you're going to be. Assigning a value to Social Security, 50% of married couples and 70% of unmarried individuals rely more on Social Security for the majority of their retirement income. And let that sink in. The majority of their retirement income. And that's not saying much when you think about Social Security is going to be the lion's share of your retirement income. But there are folks who do live off of just Social Security. And honestly, I know I wouldn't want to have to do that. It's not a very good lifestyle. So again, what you do for yourself and your own savings and investments, and then if you do have a corporate or a public retirement benefit, that would also be great. Again, when should you start your retirement benefits? These are some of the things that you might want to consider. Your full retirement age and benefits calculation. What is the amount of your future benefits and the effect on early retirement? What is your life expectancy? This is very important. There is what we call a break-even age between early benefits and full retirement age benefits. And essentially, if you start at 62, you're going to be collecting benefits for up to 5 years longer than if you started at 67. Now, granted, at 67, the monthly benefit is higher, but you've been collecting a benefit for 5 years. There is a crossover age, and this is important. If you don't have a long life expectancy in your family, You might, or your own personal health is not that great, you might want to start early just so you get what you've got coming to you. But that break even age is usually around the age of 80. And what that means is if you start early and you live to be 80 or plus years old, you might have been better off to wait. And again, this all is impacted by what you've saved for yourself and whether you're working part-time and a pension, so on and so forth. So all these factors go into this calculation. I just mentioned other sources of retirement income, and really what's important is how might this affect your spouse, which is what I've already talked about. The sooner you take the benefits, the lower amount that you're going to have, and then that is what your spouse will inherit from you in the event of your death. When the claim impacts what you receive in retirement, I talked about this already a bit. The sooner that you take benefits, the less the benefits are. In this chart, you'll see up to a 28.3% reduction starting early versus waiting till full retirement age, which in this case is somewhere between 66 and 67. And if you decide to wait for maximum benefits to age 70, it could be as much as 30% or 26.7% as this slide represents. It's unique to each and every one's situation. What is full retirement age? This slide tells you. For most folks right now, full retirement age is at age 66. If you were born in any one of these years, it's 66 at either 2, 4, 6, 8, or 10 months. And for anyone born after 1960, full retirement age is 67 years old. Most of the retirees that I work with are somewhere between 66 and 67 years of age as far as their full retirement benefits. So if you didn't know, now you do. This is what your full retirement age will be. Let's dive into Social Security benefits in general. A monthly benefit comparison between ages 70 and 62. If you decide to wait to age 70, your benefits are going to be 76% more than the benefits you would have received at age 62. Granted, you would have had to wait 8 years. Delaying benefits from 66 to 70 increases your benefits by 32%. Not bad. And starting early versus waiting to full retirement age at 66, it's approximately a 25% benefit reduction. Lots of percentages, lots of numbers here. This is an individual thing, but just to give you some general ideas as far as Social Security benefits are concerned. How long will I live? Well, the average retirement age male, their average mortality is age 85. For the average retirement age female, it's around 87 or 88 years old. 1 in 3 retirees will live to be 90 years old, and 1 in 7 will live to be 95 years old. So there are some folks out there that are going to live well beyond their mortality, and that Social Security benefit, which by the way does have a cost of living built into it, is going to be an important part of their overall retirement plan. How working will affect your benefits. You can work, but you have to be careful as to how much money that you make. If you retire early and you are working part-time or working even full-time, you can lose benefits. Essentially, in this example, for every $2 that you earn above the $23,400 annual cap of earnings, you will lose $1 worth of Social Security benefits. If the year you reach full retirement age, it's for every $3 you earn, you'll lose $1 of benefits, and the cap is increased significantly to $62,160. Once you reach full retirement age, earnings do not impact your Social Security benefits. You can make as much as you want and collect your benefits. And I do know many people who are still working and collecting their Social Security benefits. Now, those Social Security benefits can be taxed, as you can see here. Up to 50% of your benefits can be taxed at these various income rates, and they're pretty low rates. $25,000 to $34,000 for single people, $32,000 to $44,000 for married couples. 50% of your benefit will be taxable. If you're over $34,000 as a single person or over $44,000 for a married couple, 85% of your Social Security benefits are going to be taxed as well. How fair is that? I don't really think it's fair at all, but it was a tax when it was taken from you, and now they're going to tax it when you're receiving it, but this is just the way it is. So you need to be careful. The idea of delaying benefits, let's just look at a simple example of a couple, age 62, their total benefits on average could be $2,784 a month. If they chose to wait till age 66, their benefit can increase to $3,837 a month, or over $1,000 a month. And then finally, if they both wait to age 70, that benefit could reach $5,241 a month, a significant increase from age 62 to age 70. And this is very important, especially the lower earning spouse. The later that the higher earning spouse chooses to take their benefit, that's the one they're going to inherit. So, again, these are all things that you need to keep in mind. Bottom line, the choice is yours. You may decide to claim early if you need the income. You want to invest your monthly benefits. You want to delay having to take your retirement funds or from your savings, and your spouse wants to delay claiming their benefits. You may want to start early. Well, you may want to decide to claim benefits later. If you want a higher monthly retirement income from Social Security, you want to maximize your survivor benefit, you plan to work longer, and your spouse may be eligible to apply for their benefits first. So they could start theirs, and then you can wait to take yours later. Definitely you want to contact the Social Security Administration. Definitely go to socialsecurity.gov. It is there where you can set yourself up for my account, and you could get the estimates of what your future Social Security benefits are. I personally do this each year in January or February just to make sure my records are up to date and just to see what my Social Security benefits are going to increase to at specific ages. You can apply for benefits online, by phone, or in person. I've helped many people do this all three ways. So, just contact the Social Security Administration, and hopefully there is a local office near you. I've said an awful lot about Social Security. Again, it is one piece in the overall retirement planning stool. And as I said earlier, having a plan is important. Many Americans don't have one. Please take advantage of an opportunity that we are happy to offer you and let us put together a retirement cash flow. Why would you want to consider the retirement group? Well, we're definitely experienced. We work with a lot of Fortune 500 companies. We have offices nationwide, and we're happy to put together a complimentary retirement cash flow analysis. You can also follow us on LinkedIn by scanning this QR code here. And we've got a great LinkedIn page with lots of resources. If you'd like to speak with one of us, scan the QR code here on the left, and you could schedule a meeting with myself or one of my colleagues. You could give us a call or send us an email. And you can also scan, again, this QR code on the right, and that will take you to our LinkedIn page where, again, we have a number of great resources. So I've said an awful lot about Social Security. It is important to many of us baby boomers and up-and-coming baby boomers. We're all looking at it as a part of our overall retirement plan. I'm sure there are going to be questions. Please reach out to us, and we look forward to answering those questions. And with that, I appreciate your time and have a great day.